Hey everyone, just want to talk about this big move in the bond market, big move higher. So, is the bond market about to rally? Well, bonds and interest rates go inversely to each other. So, if the bond market rallies, that means interest rates will go lower, which will be good for the stock market. Now, here is a chart of our 10-year Treasury yield. All right. Symbol is TNX. This is the SIBO uh, index that keeps track of it, or that tracks it, I should say. So we got up to 5, and then we had this little descending triangle type pattern here, which tend to be bearish, and in this case it was. You can see what happens is the buyers are hanging out down at 4.84. They're content with waiting. They're not in a rush to get their orders done. But yet here you get the sellers get more aggressive as time goes by. Notice how the tops form at lower highs. So this is your ascending triangle. It shows aggressive sellers and complacent buyers, and that sets the stage for a move lower, which is what's going on here. Now, let me tell you what's really going on, and I don't mean it like what I said was wrong, but people do not trade interest rates. Okay, you can't do it. There's no interest rate market. I mean, maybe there's sophisticated futures and derivatives markets and so forth and so on. But what this is, the yield is the inverse of the bond. So we can go over here and we can look at a chart of what the bond actually looks like. So these are the same rules and the same principles we see in charts of every other security. We have a situation where what was support over here, I'm going to just get rid of that. So remember, we're looking at the bond now. This is the chart of the actual bond. So what was support over here became resistance over here. We know that support can become resistance because of buyer's remorse. People bought their bonds here and the price went lower. A lot of them tell themselves, man, I made a mistake. I shouldn't have done this. If I get out at break even, I'm going to. So when the bonds rally back up to their buying price, they go to sell. And if there's enough remorseful buyers placing sell orders, what was support can turn into resistance. So now if we come up here closer or take a shorter term picture, what do we see down here? Look at where we found support at exactly the 5 level. Trade here, low trade here, 5, exactly. How is it possible that a market as big as the Treasury market, trillions and trillions and trillions of dollars, could find a precise level at exactly 5? Why is it not 497 or 508? It's right at 5. Well, it's because it's human beings that are trading these. And when we look at a chart, whether it's a chart of bonds, stocks, cryptos, you name it, what we're looking at is a chart of the psychology of the people that are trading. For example, we just saw up here psychology. People bought here when the price went lower and starts to go higher. You get a lot of remorseful buyers are getting ready to sell. Psychology turns support into resistance. Psychology is what makes us stop at a nice round level like 5. All right. This is psychology here too. Now, this would be our ascending triangle pattern. The horizontal line is the resistance line. This is where the large group of sellers is hanging out. And they're patient. They're like, all right, well, if the buyer comes to me, I'll sell. If not, no big deal. At the same time, as time is going by, notice how you get these higher lows. Markets go in peaks and valleys. And when the valley forms at a higher level than the prior valley, that tends to be a bullish thing. And in this case, it told us that we were going to have this move higher. So, what is the ascending triangle? It is psychology. It shows complacent sellers, aggressive buyers. I don't care what market you're in. When you get that dynamic, it sets the stage for the market to go higher. All right, so it's just something to keep an eye on here, everybody. Might be a little bit overbought, so might come in a little bit tomorrow. But after that, if yields keep going lower, and again, let me go back to the yield chart. If yields keep going lower, then that'll be good for equities. Okay, everyone. Thanks. Hope to see you soon.